Hi everyone, thank you for joining me in another episode of my Q&A with Wall Street. This time I'm going to be doing Apple stock, so let's get right into it. The first question from UBS, David Vogt, asking, how do you think about your supply chain and maybe the levels of inventory or builds that you might need as you go forward to sort of insulate your business from these sort of episodic disruptions? So Apple has faced several disruptions in terms of its supply chain over the past several quarters, several years, really, ever since the outbreak of the pandemic. And so analysts are interested in how Apple's going to deal with this kind of thing in the future, whether it's making any changes. And so CEO Tim Cook jumps in to say, from a supply point of view, we did see disruption from early November to most of December. And from a supply chain point of view, we're now at a point where production is where we need it to be. So the problem is behind us. However, we continue to optimize it and will continue to optimize it over time and change it to continue to improve. So, no significant announcement here in terms of its supply chain, no big move here from Apple, just continued incremental improvements to give it more robustness in terms of protecting it from future disruptions in the supply chain. The next question comes from Shannon Cross of Credit Suisse. I wanted to dig a bit deeper into commentary on the gross margin. The guidance for the next quarter is that Apple's gross margins at 44% at the midpoint is obviously quite strong. So CFO Luca Maestri jumps in to say, we're doing a lot of work around cost, of course. Mix will continue to help both within categories and services mix as we move away from the holiday season, but we're doing a lot of work on the cost structure and that's paying off. Foreign exchange is still negative and about 50 basis points. So, what the CFO is alluding to here, and if you're unaware of Apple, let me elaborate the way its business works here and the way its gross profit margins work in the business overall. So, Apple has two segments of the business, it has hardware and it has services. The hardware side of the business generates approximately gross profit margins of around 35%, right? The services side of the business generates gross profit margins above 70%, so nearly twice as much as the hardware side of the business. So during a quarter when services are proportionately higher of overall revenue, that makes its gross profit margins appear higher in a given quarter. Whereas when hardware is a higher portion of revenue, it makes gross profit margins look lower. And during the holiday quarter, hardware is always elevated, right? That's when people are giving iPhones, AirPods, and Apple Watches as gifts and buying them as gifts. And so that increases hardware sales and makes the mix higher towards hardware and makes the gross profit margins overall lower. And so, what the CFO is talking about here, that the mix is helping in that services are continuing to grow, and that's taking a increasing role of the business overall. And it's in its most recent quarter, iPhone sales overall, iPhone revenue decreased year over year. Meanwhile, services revenue increased year over year. So that's what's going on there. And of course, also he alludes to that they're working on costs, reducing costs. Interestingly, Apple's one of the only big tech companies that hasn't announced major layoffs, right? Alphabet, Amazon, Facebook, and others have announced major job cuts. Apple has been one that hasn't. And although they haven't announced major job cuts, their profit margins are improving and looking quite strong. So interesting commentary there from the CFO. All right, and I'll end with this follow-up question from Shannon Cross asking about, can you talk a little bit about China and what you're seeing there? And CEO Tim Cook jumps in and says, when you look at the opening that started happening in December, and of course, Tim Cook is talking about the economic reopening in China after a very long lockdown period, the longest of any country in the world in China, and they started to reopen their economy. So what they saw is a market increase in traffic in their stores compared to November. So Apple has its stores over there in China. Between the change from November to December was an increase, and that followed through to demand as well. So not only were customers visiting their stores, but they're actually buying stuff. So really good news to start with. The CEO was a bit coy about talking what's going on so far in January. Didn't want to talk about it. Just said let's wait for that figure to come out before we talk about it. But saying that from November to December, there was an improvement in traffic and an improvement in customer demand. So hopefully for Apple stock investors, that trend continued into January and February as well. All right, so that's all I've got for this video. Thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.